And welcome. This is Mary Ellen McGonagle with your Friday afternoon MEM Edge show, where we put you in front of where the action is, and as always, with an eye toward helping prepare you for not only next week and beyond. Quite the week, I would say. So lots that we are going to be covering. Of course, we're going to take a look at the current markets. Where are we? How are they standing? And what to be on the lookout for going forward. Also, there were growth stocks did, of course, get hit very hard. NASDAQ down 4.2% for the week. But there were select growth stocks that were what I say bucking the downward pressure, and they're always good to keep on your watch list, because when the market pressures within this area of the markets, when they lift, these stocks will go on to greater heights. Also, we're going to take a look at stocks breaking out of bases. Yes, there were many base breakouts this week. I'll share with you what the driver was, and also we'll take a look at those stocks. Recovery stocks on the move. Now, this is a little different. Cyclical stocks, yes, there is still vibrancy there. Talking also about those areas that are going to benefit from increased mobility among individuals as the vaccine continues to roll out. That certainly was a strong area this week. And then how you can capture the move into energy. We are well into the move, of course. We've been highlighting it for weeks now, but we did get a pullback a bit, certainly today. So that would be an ideal way to potentially capitalize on the strength, get into stocks on the pullback. Let's take a look. I always like to highlight some of the primary or market driving headlines that took place last week so that you can really have a good, firm understanding of some of the drivers. Fed Chair Powell did come through when in his Senate testimony. He did pledge continued support. Unfortunately, the markets were not, I would say, entirely convinced, and we'll get into that as we move on here. Oil prices did climb higher on the assessment of that freeze that took place in Texas over that long weekend and beyond. So we did see Brent oil prices get up quite a bit, and we're going to look at that. Also, on the economic data front, we did see weekly jobless claims. They fell rather sharply. And then in addition, we did get durable goods orders for January that were very robust at a 3.4%. January core inflation really at a very nominal level, 1.5%, not a worrisome area. The Fed is targeting 2%, but I believe the market is more focused on this growth that we're seeing. And then also consumer spending was up in January 2.4%. So investors are kind of taking that inflation fear into their own hands with what there is being viewed as an economy that is expanding, which, as we all know, is generally at the end of the day, quite constructive. So let's go ahead and take a look at these markets. We're looking at a daily price chart of the S&P 500. And we did manage to close just above that 50-day simple moving average. And again, those of you that follow my work, you'll know that this, and not just my work, it is common that this 50-day simple moving average is very closely watched, particularly as it relates to the broader markets. And we did just close right above that. So we're certainly in okay standing on as far as an intermediate term. But let's take a look at some of these momentum indicators. The RSI has broken below that 50. It's in negative territory. We also have stochastics that are negative. So this really paints what I can only call a mixed picture. But from my work, certainly caution. Caution is warranted, but there are bright spots. So we're going to get into all of that. And then for those of you that subscribe to my MEM Edge report, you will even we're going to get further into what we are seeing as far as the markets, kind of a little more behind the scenes. I was hoping to pull up the NASDAQ here to give you a little more of a broader view as far as the markets, because the NASDAQ did get walloped, for lack of a better word, down 4.2%, and that is a big decline. This index did break below that 50, and we also have these negative outside momentum indicators. So definitely pointing toward growth stocks. If I had a yellow flag on the S&P, a red flag on the NASDAQ. So very precarious situation here for growth stocks. It's going to be on a stock by stock basis, but we're also going to look at individual groupings within technology as well to give you a feel for where that weakness is really stemming from. So let's do that right now. We can take a look at the S&P 500. These are the 11 sectors, as well as the S&P. And then per usual, I put that RSI indicator in there and then sort it by descending order. We want to see where that outperformance has or is emanating from. And sure enough, energy appear remaining at the forefront. Energy stocks, take a look. They were up 4.4%. Very much in contrast to that negative 4% in the NASDAQ. So what we can see is a very sharp continuation rally. Here's that pullback that I mentioned where the energy sector broke below that 10-day. Take a look, it closed in the upper portion of its trading range on the day. So quite bullish for energy stocks. I know a lot of analysts, Wall Street finally getting on board with two Wall Street firms calling for Brent crude to get up to $75. So that's a big number in Q3. Second up here is financials. Those of you that watch the show, you'll know that we've been highlighting this area for several weeks now, and even for several months. We did first get into financials back here in November. My MEM Edge report stocks we did get in prior to this because they were turning bullish prior to the overall group. And true to form, those stocks that we selected, because they preceded the bullishness in the group, they were the first out of the gate. This is historical precedents will tell you they will go on to be your leadership names. We still have those stocks on our list. And certainly each week we designate whether they can be held or bought. So we did get a late week pullback here in financials, but not entirely unexpected. When you look at these groupings, certainly financials tend to be a little bit slower moving. When they get into these overbought areas, you will see a pullback. So still up at the forefront. However, let's get back to those other sectors and we can take a look at other areas that really did not fare well. Certainly of note is technology. That sector down 3.8%. In last week was also a negative week for tech. So this is where a lot of the heaviness is emanating from, and we can see negative momentum indicators also taking place. Of course, everything to do with high interest rates. We're going to get into that as we continue to progress here, because I did want to share with you some other areas that really fell out of bed, for lack of a better word. This is consumer discretionary, down 5% this week. Now, I will say a lot of this has to do with Tesla. Tesla was down, and it is a big component of this grouping, but there are other areas that are a little weak here in consumer discretionary as well. Let us drill down even further, as I like to do, get into select industry groups, kind of pulling the curtain back even further, again, on the prowl for that relative outperformance, and then also making sure that you are aware of where the weakness is. And then from there, you can, of course, assess your holdings in those weaker areas. Make sure they're not breaking support and could be hurting you in the near term. So up here, I talked about oil prices, and sure enough, we are up here at $66. This is something, again, that I've been covering. We did get into oil stocks back here in November. Same concept as far as embracing those winning names. At that time, the big goal was back in last fall was for energy. Could it reach 50? Well, it sure has, and then some. So energy stocks are, of course, impacted positively as oil prices increase. and definitely in an uptrend there. Of course, that unfortunate freeze in Texas did halt production, and there's speculation that it won't be for a little bit of time before they can get those frozen oil well caps and so forth back in good order. This is KRE, that banking in line. We talked about that pullback, very orderly given the really sharp increase that we've seen. It's been just such an unusual period where those stocks on my MEM edge list that are in that cyclical area are posting double-digit returns, not very common. So here we are with this volatility index, and better known as the fear index, the VIX. I like to pull this up during periods such as now. We can see that it did spike on the week, got up to about 31 on that VIX, and you want to look at history and see where we've gotten during other periods that were pullbacks or corrections, and we're still not quite there, because when we get into these higher levels at some point, you expect the markets to stabilize and potentially resume their uptrend. So moving right along, we can take a look at some of these other areas. One last area I do want to cover here is biotechs down here in this lower quartile. The group was down 5.5%. This is IBB, and this is all about risk off. A lot of these biotech stocks, they are in the formulation phase, if you will. They don't have earnings just yet. And so you are buying the possibility that their particular product will make it through, and the FDA will approve it, but we can see that it has broken support. So this is, in my mind, just a real clear-cut indication that the markets are standing back from these riskier areas, given the broader markets as far as interest rates and so forth. So from here, let's go ahead and take a brief break. When we get back, I have lots more to cover. We're going to look at some of those recovery plays. We're also going to take a look at growth stocks withstanding the pressure, and lots more. We'll be right back. Hi, this is Mary Ellen McGonagle, author of the MEM Edge Report. In my bi-weekly report, I highlight top growth stocks as they enter buy zones, and I educate subscribers on why that stock is attractive both technically and fundamentally. In addition, you'll be alerted to when it's time to exit that stock based on negative technical action. And this bi-weekly report gives you confidence by providing fundamental insights into why an area of the market is strong and which companies within that strong area have the best growth profiles that'll help propel that stock higher. Subscribers to the MEM Edge Report are benefiting from my expertise in uncovering top performing growth stocks. Subscribe now to take advantage of my special trial offer. And we are back. From here, I did want to go ahead and share some of these stocks that are really breaking out of bases in this case, and otherwise outperforming in general, with an eye toward the economy not only getting better, but more importantly, that individuals, the really intense lockdown could be receding, certainly well into the third quarter, I would say. We should see more as far as mobility, but the markets do tend to look forward, at least 2 quarters. So this move into these stocks makes sense. First up here is a smaller name. It's called Eventbrite, and they allow people to put meetings together. And EB is the ticker. I did want to point it out because it did have this nice base breakout, nice volume characteristics, and then we can also see that the RSI and the MACD in positive territory. So I thought we'd start out with a smaller, lesser known name. From here, we can take a look at stocks that really the numbers are not there yet. They've had dismal recent periods. The first one up is SeaWorld, SEAS, and in some cases it's difficult to, certainly from my work, embrace. I need to see, or would like to see, the financials, if not currently in place, at least the prospects. But SeaWorld, they did come out with numbers. We did get this gap up, and really the numbers were not good, but they were not as bad as anticipated. So the stock's in a really super sharp uptrend here, overbought, but something of note, because then from here we can take a look at other thematic names in that area. This is Six Flags Entertainment, another one that is also all about the reopening of their parks. And I did want to point this out, but they don't have as high a yield as they used to have, but the stock is in a confirmed uptrend, finding support at this upward trending 10-day simple moving average. Your outside momentum indicators are positive, so certainly a bit more orderly than that SeaWorld. One last name in this space, if you will, is actually, that is not the correct stock, but that looks good. I was going to cover this later. That is an industrial name, but I did want to share with you MTN. This is Vail Resorts, and they do actually have a consortium of many mountains that they are involved with as far as management. And we can see this is another stock that's in a very confirmed and orderly uptrend, with the outside momentum indicators also constructive. When you see this and you feel that the markets are crumbling around your ears, you can sense the relevance here as far as the fact that they are in an uptrend with that forward-looking mentality. Let's take a look at other resort type of stocks. This is Marriott's Vacation Club, VAC. They are very involved in the timeshare industry, and apparently they came out with numbers that showed Q4 an increase in people purchasing timeshares with an eye toward the future, certainly next summer perhaps and beyond, but also in a very confirmed uptrend. The stock's overbought here. I would look for it to consolidate a bit, but certainly these volume characteristics on this upward move earlier in the week point to further upside. So definitely keep that on your radar screen. Another one that is in this space as well, it's called Travel and Leisure. So we can see a lot of these are just in these very nice confirmed uptrends, trending upward. Of course, we can see also very nice volume characteristics as the stock ascends, and that is what you want to see to give evidence that the uptrend could very well continue. Here we are looking at Planet Fitness, of course, a workout chain, if you will, that is breaking out of a base just this week. So let's take a closer look at that base breakout, because when you see these stocks breaking out of bases, it's about a 6-week base. You want to look again at that volume to give you that confirmation, that sense that we could see further upside. It did get overbought, so any pullback is very natural, but these are the types of names that are gaining traction currently as the concept that the vaccine rollout is really going to positively impact. I talked about base breakouts. I'm just going to move right into that from here, because it will be a continuation as far as the theme, as far as what areas are seeing buying in the face of difficulty elsewhere. Let's see if I can, we'll start with CCL. Of course, these cruise lines are, this is another one that broke out of a base this week. I did do a show Monday morning, Your Daily 5, and I highlighted VAC as well as CCL as potential base breakouts, and they did in fact carry through. And again, big volume here. So not necessarily all of them, but these cruise lines are beginning to start cruising in the beginning of March. They're starting in Europe, and then in May, they will start having, those are going to be mini cruises. From there, they're going to do longer term 7-day plus cruises in May. So it's the real deal as far as these guys getting back into action. Let's take a look at another recovery play having to do with travel and another base breakout here. This is MasterCard. And the reason that this is travel related as opposed to, and it's also certainly increased potential spending, but MasterCard is a stock that benefits from individuals in the US, of course, that travel and use the card. They do have improved profit margins because the fee structures are such that they do, it is an area of upside growth for them. So MasterCard had this nice base breakout on Wednesday, big volume characteristics, outside momentum indicators are positive, and then a little bit of a pullback, but very orderly. So definitely put that one on your radar screen. From here, we can take a look at a couple of one other name. This is not going to be recovery related, more news related. We can look here at General Electric, and this is all about, for those of you that follow the news closely, you may have read that Raytheon RTX had two separate incidences where their airplane engines caught fire mid-flight last week. So the reason GE is rallying on that not great news is because they are also manufacturers of engines. There's a airline, and there's a sense that they will benefit. So GE had that nice base breakout on volume, pulling back here. So certainly of interest. So from here, I would love to share with you some stocks in the industrial sector, and then also some add-on plays, because earnings, as I said, earnings season is still very much in play here. So a lot of the stocks that are, even if they are in growth areas, they are still responding constructively to earnings. So we're going to start here with this sector summary. So this is today. What we can do from here is access different views. I'm going to look at a 1 week view, and we'll see the industrials are up here for the week, down only less than 0.5%. And that is definitely superior outperformance. From here on the 1 week, we can see those airlines up at the forefront. I did cover these last week. Heavy construction is an area that I'm just going to take us into, because a couple of these names, they were up big, but they still have room to run. This is PWR, Quanta Services. They did come out with their numbers this week. So this is actually what I like to see. So when this company comes out with strong numbers, they have a gap up, which also in turn creates a base breakout. Take a look at the volume, big volume characteristics. So the company came out with earnings 31% year over year and 23% above estimates. So from here, you can see it's a little bit overbought, but this MACD is turning from a low level. So definitely keep that on your radar if you're looking to diversify, to buffer some of the moves in as far as the growth areas not doing quite well at this time. So we can look at a couple of other names that are in that same area with heavy construction among industrials. This is ACM. This also had this nice base breakout last week and consolidated a bit, and is poised for another leg up. One other name that we can take a quick look at here that's also in that heavy construction area is Jacobs. J is the ticker symbol. A little more of a V-shaped recovery, but we did get that base breakout this week on nice volume with your outside momentum indicators also looking quite constructive. So let's go back. Let's see if I can, it's going to take just a couple here so we can get back into that industrial area. That 1 week, I'm going to take us to one other area that we can look at, and that would be industrial machinery. couple of names here that I wanted to share with you. Now, again, this is a big move, but it is earnings related. And I think you'll see what I'm seeing here with this chart because let's just go ahead and mark this up. I know that John Bean, JBT, they do work with the airlines. So that is more of a future play. But this week, it was all about their quarterly earnings results. They came out. The earnings were negative year over year, but they were 15% above estimates, and that was enough to get investors excited. We can see outside momentum indicators appear in a constructive manner. And of course, this is all about a recovery in the airline space that would help keep this uptrend very much in place. And then one last name, because I do have other areas. I talked about stocks that are withstanding in growth, withstanding the downward pressure. We'll get to that next. But Ingersoll Rand, not the most beautiful chart, but it did have a base breakout. So we can also see the MACD just turning positive here. And it also was earnings related. They came out with numbers that were 43% year-over-year earnings growth, 18% above estimates. So when I am looking at base breakouts, if it's earnings related, that is really a confidence booster as far as more potential upside. We also are seeing analyst upgrades after the number. So that's good stuff. Okay, so let's move on because I want to share with you a couple of areas and names that are really, as I said, in this growthier area, but are doing well. The first up is HPQ. I'm sure we're all familiar with Hewlett Packard, but their new name is HP Inc. And we can see that the stock had this gap up after reporting very strong numbers. Their numbers were well above estimates, and their revenue or their sales numbers on their computers, desktops, laptops, and then also printers, surprising growth there. But I guess as people are working from home, you will see more office related product sales. So nice gap up here, nice RSI and MACD momentum. We can see it's overbought, but it can remain up there for some time. So what I wanted to do from here is share with you some add-on stocks. These are names that are in the desktop, laptop. They provide parts to that area. So let's see if we can go ahead and pull up that stock. I apologize, but I'm going to just do it from memory. How about that? Just trying to check my notes here. But this is Western Digital and WDC. Now, we're not early in this play, but for those that are anticipating continued upside, given Hewlett Packard and other laptop, this is a classic, actually, gap up base breakout and a continuation rally. It is naturally very much consolidating here, but we could see another leg up, another component provider as far as memory, and we can see this is STX Seagate, also very much in a confirmed uptrend. So I certainly wanted to share that with you. And then one last name is MU, and I'm going to leave it at that. We can see a nice confirmed uptrend here. They provide memory for these computers. So everyone, I do want to urge you to take a look at my MEM Edge report. You can use that link below. I'm going to keep you very on top of the markets. Last week, I put out an alert report every single day, keep you on top of whether the markets have more downside ahead and what to be on the lookout for, and also highlighting those areas outside of growth where you can take advantage of the continuation rallies there. Have a great weekend, everyone, and I will see you next week.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.